Evening, ladies and gentlemen. Welcome to another episode of Market Minds. As always, today we're going to go through the GBPUSD chart. Today's the 25th of July and the time is 1:16 a.m. UK time. Hope you're all doing really well. Hope you've had a really good week of trading. So, without further ado, let's get on with it. So, as always, we're going to be having a look at the higher time frame. So, let's start off with the monthly chart. So we always discuss this this parallel channel that we've sort of created and how we're going in a downward spiral. And as you can see, look at this month. It's been absolutely amazing for the fact that we've had a clear rejection from this level. And if you've seen any of the previous videos, you'll understand that we created this Elliot Wave. And you know the theory about Elliot Wave that the wave 4 cannot hit into territory of wave 2. And look how close we were to that. It's absolute perfection. So let's go in a little bit, zoom in a little bit to show you what I mean. If we go by the daily chart. And look at that. This was our high. And literally we were only a few points below entering into zone 2 territory, wave 2 territory. So, and if you remember a few weeks ago, I mentioned when we were about to get up to this high to say we were at high level resistance, we're going to start heading down. People were very, very bullish at that 1.30 level to say we're going to go up to 135, 134, etc. And I was like, well, if we're going to validate this Elliott wave impulse Elliott cycle, we're going to have to come back down. And that's exactly what's happened. So if we have a look at the day chart, look at that. Absolute perfection. And if we look at this one, yep, this level was this key area that I've done there was exactly the point where wave 2 started. And look at that. We've failed to come close to it, and let's give you that example of how close we were, but nevertheless, we've come down. Excuse me. And as you know, with Elliott Wave, it's always about market psychology and human greed. People up here are becoming very, very greedy, thinking we're going to go up to, we've broken 1.30, we've broken 1.31, we're going to go up and up to 1.34, 1.35. If we go to monthly level, then maybe they were thinking that we would, maybe make another high or at least come up to here, 1.40, take out all these highs. But nevertheless, we've head back down, and this is where we are. And with Elliott Wave, obviously, Wave 5 that we're in now, which I believe is what we're doing, most of the time, it is actually as long, almost as long as Wave 3, so which at least gives us some sort of scale to go with. So then this is all hypothetical, and this is really, really high time frame. So if we were to say that Wave 3 was, let's get the forecast price range. So if we say this was a 24% decrease from the top of wave 2, or from where wave 3 started, and if this was to replicate itself, into wave 5, we're roughly looking at around 98 pence. Which again, if you think about it, makes sense that we go 98 cents. Sorry, makes sense that we go below the $1. Obviously, people expecting that we're going to bounce off the $1, but we don't. We head down, take out all the stop losses to about 98 cents, and then start heading back up. Which, think about it, makes sense. But we're miles away from there, so we'll get there when we get there. But it's always good to see a long-term time frame and see what the market's going to do. And that's assuming that we've still, this will carry on sort of heading down, which I believe we will, but the market does what the market does. It wants to do its own self. We can only try and take high probability trades. Right, so enough of that. Enough of fun of that. Let's move on to what we always do, which is having a look at the monthly chart. There won't be anything new because we're still in the near the end of the month, so nothing else added, nothing else that we need to add. Had we cleared this level, this monthly, then we would have looked to think about adding the other levels. But we've come back down, and nothing really more to add on. We have this monthly, but we've gone through it, and again we've gone through it, so it's no point. And yeah, and this one down here, but we've got one there, the recent one, so yeah, nothing to add there. So let's go down to the weekly chart and turn it on. Okay, so we've got the new weekly that we just created, the one that we've headed back down, so let's always add that. So the plan now is that I will do 2 videos a week at least. So hopefully one today, and the next one will be on Sunday. And then we'll change it from there to Sunday and Wednesdays. I think after Wednesdays, after we've had always most of the big news is on Wednesday. After we've had that, it'll be good to do another video then as well. That doesn't seem to be working today. Okay. And we've got this weekly down here as well. There we go. Now it's working. Okay. And yeah, I don't think we've got any other ones really, because this one is, yeah, so close to this one, and then we've got down here as well. So yeah, I'm happy with that. Okay, that's the weeklies done. And then day level, whoops, let's add them on to the weekly level. Great, find that. Let's go to daily. As you can see, every single day we've just had lower lows basically. Retest on Tuesday, we retested the high of the daily, come back down, straight back down, retest the daily, down, retest the daily again, down, and pretty much looks like we'll probably head down as well from the looks of it. It's all been bearish. We have 1, 2, 3, 4, 5, 6, 7, almost 8 days of red candles. And who would have thought that when we were up here at 1.31 being very bullish? And it's always good to see the market. Like you can see like 1, 2, 3, 4, 5, 6. We've had 6 days of up, followed by almost 8 days of now red candles to show you that when the increase is at such staggering pace, more than likely it'll come back down as well. So that's always to remember that when it goes increases in such high pace, it's more than likely it will come back down in that pace as well. So it looks like we're still on a downward trend. Any other dailies to add? Right, so we've got a new daily here, which I think is important because you can see we've hit it once, support, second time support, third time we've then turned into resistance, and we're heading back down. So we could retest it just to confirm even more the fact that it's a solid resistance level. Okay. This daily, I'm not too happy with because I think we've crossed it down enough time to be honest. Resistance, turned it sort of into support, and it's just, I think we can get rid of that one. Okay, and yeah, and we'll add in today's the one as well. I have to zoom in a little bit to get that one correctly. There we Okay. Technically that's the daily open, but we'll leave it as daily level. Actually no, let's label it as daily open, because that will help us later on decide what we're going to do in terms of our trades. Okay, so that's that done. Okay, and yeah, I don't see any daily that we need to label below us. We're literally all the way there, and then we've got one from a long time. We can leave that. It's literally the bottom of the candle there. Okay, and we've got one daily down here, but we'll spin. Yeah, why not? Because it was the latest one that's created, and the way things are going, we may well even hit that today, which we'll discuss a little bit later. Right. Okay. So I'm happy with that. Right, so let's go to 4-hour chart. Actually, before we do that, let's have a look at our parallel channel. That was the old one. I think we can get rid of that now. 4-hour trend line that we created. And the funny thing is, you can see we've come back into it. So before, when we'd broken through it, and we've come back into it, retested it, and now we're coming to the bottom of the channel, really. So, but I think even more better than that is the daily one, which is from a longer period all the way down there. And even for that one, we're starting to hit the bottom. By all means, we could always go through it, but sometimes it is helpful to see it and try and get reaction as well. Now let's move this a little bit, I'd say. The problem with these parallel channels are, or these sort of channels are, the 4-hour trend line or the daily trend line is, they're still accurate to a sense, but there's a lot of leeway for it. For example, here you've gone through it, come back up, so they're still sort of fairly accurate, but they're not very helpful for daily intraday trading. They're better for longer time for swing trading, basically. Right. So we've got that. We can leave that there. Right. So let's go to 4-hour trade and see what we can do. Right. Let's add on some Fibonacci levels. So latest low, that was around here, all the way to the latest, to our top level, which was the first one, I believe. So we're coming up, we've just hit the 618 and gone back in and gone back a little bit up. So let's zoom in a bit. Get rid of the dailies for the time being. Does confuse stuff. Okay. So as you can see, we've coming up to, we touched the 618 today, on Monday, sorry, yesterday, and had a little bit of a pump, but we're coming back down again. So more than likely we're going to hit at least a 6.6 or the 7.7 level, which, as you can see, works out perfectly in line with this lower level here. So this level, as you can see, was resistance, resistance, support, support again, and we went back up. So this level, so now we've got a few support levels. We've got the 0.7 level, we've got this daily trend line that we drew, we've got support of that, and we've got this daily below us as well, which, theoretically we could hit, take that out and come back. So between the 0.7 and the daily is a high chance that we will have some sort of a reaction to this. So in theory, we head back or head down slowly but surely grind ourselves down to the 0.7 level, around the daily perhaps, and then jump back up from there. For us, I mean, as a trader, we always look at it in terms of risk to reward ratio. It makes sense to do something like this. There we go. And your stop loss is perhaps just below the daily. And the target would be at least to the top of this range here. And if we turn on the daily levels, well, actually we need to turn on the dailies and the weeklies to see what else is there. And the monthly. Okay. See if anything's here. Let's hide the Fibonacci retracement for a time being and the position, long position. Yeah. So yeah, we've got a daily at the 0.7, I believe. If I turn that back on. Yeah, absolutely. We've got these two dailies here that are really, really close to each other. One from historical and one recent. So yeah, more confluence. 0.7, daily level, trend line, you name it. We've got that there with another daily here. So you could take a long from here with the stop loss just below this daily here. I think that makes perfect sense. Think about it. Yep. So we're taking it there, and if we turn on the retracement fib, yeah, 0.7 level, bottom of this channel here. So a lot of liquidity here. Remember, we turned it into support as well. Again, it's still support and broken. So yeah, waiting to come there, and then the top target, you'd say at least this daily, which not a great risk to reward, but still. And I'd say at least up to the top of this range, which would then take us to at least solid 1% rise and a risk reward of 1 to 3. I mean, theoretically speaking, we could go all the way up to here, really, around here. This was a sort of next level, really, wasn't it? Yeah. So either way, you're looking for a reaction from here to, take a profit. It could, depending on what the reaction is, it could be as low as here, really. But we know that this is what we try to do is get as many confluences as we can. So the confluences we have here are at the 0.7, which you notice that sometimes it does, it goes past the 0.66 and hits the 0.7 and then makes a reversal from there. Simply because so many people are aware of the 618 and the 66 level, so they tend to be broken, or they'll put the stop losses just below it, and then it wants to take them out. But here we can see we've added confluence is below of the low of this level here. We've got the daily trend line, and we've got the daily level here as well. So I don't know how many more confluences we want to see. So that's my theory for taking a long, right? Now in terms of short, and yeah, when we come back up, the 0.5 level is the one that we tend to really go up to and then come back down again. So again, top of this level would probably make sense. And in terms of shorting, so let me show you one other thing as well. So this is how to take an even shorter trade, you could say. So we go in the 15-minute chart. So we've got the daily open here. So we need to add our other levels for the daily trading, which are the previous day value area high. So yesterday was obviously Monday, so our high was around here, really. Yeah, I mean you could put it there, but the main area where there's a lot more volume, you could say, to an extent, was around this level here overall. So this would be your previous day value area high, previous day value area low. Don't think that's changed much, to be honest, but yeah, okay. Let me hide the weekly levels and the monthly. Okay. And our previous day value area low. Let's go about here, to be honest, because then it includes this and this as well, which we're at basically at the moment anyway, so that doesn't help much. So at the moment, so what are our chances in apart from that major confluence which we've got down here at the 0.7 and day levels? But in the meantime, so if you want to take a short, ideally you've got this daily level open that we are now going to retest, and 9 out of 10 times we tend to head back down again. So that's one option which just hit now. We hit the daily and come back down. And are there any other levels there around here? Nope. Monthly, we can turn these on now because we're at a shorter time frame, so that it doesn't confuse us as much. And we've got the weekly here, so there, we retest the weekly and come back down. That's one potential intraday short trade that you could take, and in short in terms of shorting and as well as in the length that you take it. And yeah, apart from that, really, apart from this level here, unless you wait for it to go back all the way up here, there isn't really much of a trade. We've just made lower high, lower low, lower high. Potentially, we're just going to go down lower low really, and keep going until we hit something and come back up. So yeah, I don't see any really good short trades apart from the one we're at now. And then what you do is your stop loss would be potentially top of here, above the revap, and just above this level here, and look for a head down. So basically it would be something like you can do it from the weekly really, which is probably a stronger point, heading all the way back down here, and your stop loss would be about here. It's a really good risk to reward ratio as well, mind you. So that could be one option for a short trade that you could take. Apart from that, the other one is obviously the major one is up here. Take out all these highs. Go higher, sorry, about here. Stop loss above this other daily, and to head back down. So that's your other potential short. I don't see this playing out very well, to be honest. I don't think we're going to go that high up. Unlikely. More than likely, we'll probably just hit the weekly at most. Well, we've hit the daily, and you can see we're already starting to have a little bit of a reaction. But yeah, most likely we'll hit the weekly and come back down because this is the previous day value area low and the daily open and the weekly there. So strong resistance from here where we've hit, and we'll probably take out this low as easily. And we've got the big level of support down here at 1.27564. So yeah, that's my thinking so far for intraday at the moment and for what we're heading. In terms of what we're going to do, like in slightly longer time period, apart from the Elliot Wave, of course. Like I still say we're going to head down from here, and then we're going to head back up at least to around this 0.5 level, take out these people who've shorted from here, and then to head back down. Overall, we're still going to make a lower high, but I definitely think we're going to have some support down here, because remember we've had 7-8 days almost of constant rates, so we do need a relief rally, and I believe it should come soon, hopefully. And this level is definitely a good support level that we will probably hit soon. Right, so that's that. The other thing I wanted to mention was DXY. Now, you obviously notice that the DXY is basically the opposite of GBPUSD. So when DXY pumps, GBP goes down. So if we look at it in like 4-hour charts wise, and let's look at this in the 4-hour, which we are. Let's hide a few of these things just to make things a little bit easier. And get rid of that fib. Actually, right, I can leave those. So as you can see, like since about, if we go from here, Friday, 7th of July, we've just had constant pump after pump after pump, right? And then if you go here from the, yeah, as you can see, 10th of July, 10 a.m., constant dumping. So basically, they're inverse. And it's always good to see what the DXY is doing. For example, here we know now that, I've written, I've plotted some of the weekly levels, the main strength ones, you can see that if it's cleared this weekly, right? This weekly was resistance, we turned it into support, we've cleared this weekly, and then, unless we come back down, we might come back down a little bit, but more than likely we're going to go up to this weekly because we've cleared, there's not much resistance here, and we're going to go up there. So even if we go by daily chart just to see if there is anything, as you can see, apart from, single red candles, there isn't much. And the way that we've gone up, we went down such sharply, we could easily go back up, at least up to around here, maybe above the weekly here, where we start to get some sort of resistance coming up. So yeah, and then it makes sense. For example, if we were to do something like this, and let's get so this heads up to this weekly, sorry, daily, right? In the meantime, this heads down to this daily, about the 0.7 that we were mentioning around here, which makes sense that this heads down, this heads there, and this heads up. And then we have a reaction from there to come back down. And then here we have the same thing that we go back up, around up to here at least. So yeah. So it's always good to see inverse. Like, we have this theory that, okay, the GBP is heading down. But let's have a look at the XY. We have a look at the XY. We see it's cleared the resistance levels, that major resistance levels turn into support. Okay, that literally means it's going to head up to the next level, which is all the way up there, right? There isn't really anything in between. We've got these levels here, but we went through it completely. And we've gone through it up again, and we're sort of almost turning into, you'd say potentially support and go back up again, really. So, yeah, this level is like went through and went through again. So, unless we could, market does what it does, right? You can always go back down, but more than likely we're going to go head back up. And then you would look at this and be like, okay, so that means we're going to head down to at least over here. So that's always good to take a view of the DXY and see how it's doing. For example, over here, when you see it, like, there's nothing close by here, like, okay, we've cleared this, we're going to go up to the next level, right? So in the same time, you wouldn't then go turn around to GBP and be like, okay, I'm going to long this, because they're inverse to each other. So it always helps to have a look at DXY, see what it's doing, and then compare that to the GBP, right? So I hope that helps, because I find that helps a lot, especially even in like intraday trading. So if we even go to the 1 hour chart, right? And then you have a look here, and if let's go to this as an hour chart, you can see, like, for example, here, if this is pumping, starting to pump, then we're gonna, if you cleared this weekly and cleared over here, and it's gonna go up to the next weekly easily, right? There's no way you're gonna turn around and take a long on the GBP, because you can see this is where it's heading. So it's always good to have a look at the DXY. Right, so that's all done. Bitcoin, obviously, it does what it does. So Bitcoin, I always find it really helpful to look at in the 4 hour chart. It also, gives you an overview of what it's doing. I don't trade the Bitcoin, don't trade Bitcoin at the moment. It's just have it open just to view it and see what it's doing. One sort of, almost funny thing you want to see was XRP, because you had this massive pump saying, oh my God, we've gone up to 95 cents. This is going to the moon, right? That's what everyone's perception was. But then we've come back down to 69 cents, the way it's looking. If it goes down below this level, then it's going to head back down around here, 59 cents. So it's just funny to see that how everyone was so super bullish on that day, and then sort of come back slowly but surely, grinding itself way down. So always important to understand that this is the way the market works. So that's what we've seen here so far. So let's have a look at what's in store for us today. Today is Tuesday. Nothing really in terms of anything exciting or important. Nothing with 3 stars, basically. GBP. Yeah. Sorry, let's go today. We've got CBI industrial trend orders, but not much of an effect. USD, nothing really. Consumer confidence, apparently, but considering the day is, I don't think it's going to make much of a difference. And then we've got obviously the big things coming on tomorrow. So Wednesday, so nothing really exciting today, but tomorrow covers up, makes up for everything. We start off with nothing important in the US apart from nothing too exciting in terms of building permits or new home sales. And I mean, new home sales always gives you an indication of where the market's heading, because if it's suddenly 727k new homes, right? That suddenly drops to 500k for argument's sake, 400k. Then people know, hold on a second, we've got a housing crash in order, right? Something's going wrong, something's broken. And then the reason why it's really important tomorrow is that we have the Fed interest rate decision, which is a given that it's more than 90% chance that it's going to increase it from 5.25 to 5.5. However, what's important is the press conference. Now, the press conference is important because that will outline what they think will happen going forward. Do they believe that inflationary pressures are have hit the max and they're starting to drop down, and there will be less chance of an increase in, say, August or September? Then expect a dump on the dollar, a dump on the DXY, and expect the pound to go back up. But if they're still like, we're still looking into it, we're still not gonna take a foot off the pedal, off the gas pedal, then expect the DXY to pump and the GBP to go down even more. So that's what's going to happen. So in terms of the market wise, so we could do something like, if we could next 2 days, we could just slowly grind our way down to this late level. The FOMC decision happens, and the press conference to say, well, we're going to take our foot off the pedal, then expect a pump on the GBP and with the DXY dumping, and then maybe a good level up to at least about around here, 1.295 perhaps, or at least 1.29 that we're going to pump up to. But other scenarios that they say we're potentially going to increase rates in the US, then expect us to make a much lower, and then we'll come back down all the way back down to this support level at 1.26, because that's going to take a DXY will pump. Because if you think about the DXY, right, I don't think people understand how much it's constantly been going down for how long, right? And if you think about it, uh, what was the price of DXY when Bitcoin was at $69,000? Was it as low as this? I don't think so, but I'm pretty sure it wasn't this low. But if we go zoom out a little bit, you can see from highest it hit was in September 2022, right, when the GBP was down from there, or from its lowest, right? From there, and even recently, right, you've got to understand that it's just been dumping constantly. It's gone even from here. We've had a almost 4% dump down from there. So it's got to recover eventually. And if you look at it just making lower lows, 5-6% from March, and from the beginning of the year, that's always a good one to look at. You'd say it's, yeah, about here. You could say it's, oops, it's almost 6% dump on the DXY. So there's bound, and it's hitting levels that it hasn't hit for a long time, I believe. So if we go monthly. So the last time it hit this level was in April 22, so about a year, over a year really. I mean, there's always more to go down to, without a doubt. You can go down to 88, 87, but generally speaking, we've sort of come down across this sort of support level from here, which was resistance and resistance, turned into support. We've had a bit of a pump, so I personally believe we're still going to go back up again. But that's just my opinion. But we'll see what happens. I think next so Wednesday is a crucial day to see what happens and to see where DXY and GBP head. So yeah. So let me know what you guys think. Let me know what your opinion is. Let me know what you think. What we're doing right. What am I doing right? What I'm doing wrong. And yeah, hope you have a good day of trading tomorrow. Be careful on Wednesday because expect a lot of volatility all day basically. From ever since as soon as US opens, just expect a lot of volatility. If you're, that's the other thing I want to mention was if you are in a position, great. Before Tuesday, you've taken a long, I mean, you've taken a short from up here, and then you're heading down. By all means, you can leave it open because as long as you have your stop losses at decent levels or take profits. But trying to take a trying to take a trade by looking at the data, like 7 o'clock UK time, you see that they've increased it by 0.25, and then trying to take a trade, that'd be very risky and highly not recommended. So I hope you're all well. Hope you have a good day trading, good week of trading. Let me know what you think, and I'll speak to you guys soon. All the best. Take care. Bye bye.